The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva, they've got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Looks like the markets are going back the other way again. The S&P 500 now down 0.35, so it's basically flat, a little bit below the line right there. The 10-year Treasury down 6 basis points, 2.775 right now. Mortgage-backed securities are up 23 basis points. Means interest rates are down a little bit. And OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual lock rates with consumers across 35% of all mortgage transactions nationwide. So let's see what the loans actually locked at last week. Now, you will recall, if you were listening to us, if you saw the news on Friday, you'll recall that every Thursday morning, we get the numbers from Freddie Mac. They tell us what interest rates are. Last week, 4.99% is what Freddie Mac said, but OBMMI tells us that they locked at 5.452, up 12 basis points. 30-year jumbo locked at 5.305. The FHA loans, 5.428. USDA loans, 5.34. And the best loan on the market for those that earned it, the 30-year VA loan, 5.428. That's where the loans actually locked at last week on Friday. Yes, I know that the Freddie Mac number came out on Thursday, but we just gave you the actual numbers for what happened on Friday. So just throw that out there for you. You want to know that stuff. This is reality. This is where the loans are locking at. You know, you can go, and this is on average, and it's a company that's got 35% market share. So they know what the numbers are, and it's all technology. So they can just hit a button and say, okay, what's the average? Boom, we got it, 5.452 on a 30-year conforming loan. And if you haven't seen the graphic yet or the posting yet, well, the team just finished this. So a loan that closed last week, I think it was last week, maybe the week before, our team did a great job. They closed in 7 days from the day they got the contract until the clear to close. 7 days is what the team did that in. And they actually did it at 1.25% below the OBMMI number. So when you look on here and you see conforming at 5.452, the loan actually closed at 1.25% below whatever that was for the date that it happened. Now, the question becomes, why is all of this happening? We need to understand not just what is happening, but why is it happening? And, you know, last week we got the employment numbers, and the employment numbers came out very, very strong. But some of us looked at them and said, you know, something just doesn't smell right. There's some fish here. And you get a little bit of time to do a little dissection of the numbers, and you wonder, okay, the business and household survey showed 528,000 jobs versus 179,000 for the household survey. So why is there such a big difference? The household survey flagged 168,000 decline in employment, 84% of which has been a loss of full-time positions. Business survey has shown a net employment gain of 1.68 million over the past 4 months. Both of these are over a 4-month period. What is the difference? Well, the difference is part-time work. Every time a person gets a new job, that's called a job creation in the BLS report. So if you have 2 jobs and you got a third, you just got another job. If you had no jobs and you got 2 jobs, 2 part-timers, you got 2 jobs. That's 2 jobs in that $528,000 job gains. So not exactly the rosy picture that the government wants us to think it is. Now you got 179,000 was the gain in the household survey. Yet we're seeing a lot of people that are just dropping out of the workforce. So that's another big issue when people just, they give up, they throw up their hands and they say, I'm not going to even try anymore. That's why you see the unemployment number go down, because they're no longer in the workforce, and they're no longer part of the calculation. When the numbers are more accurate, we might be seeing a different story. And now that we've got the Inflation Creation Act passed the Senate, it hasn't gone to the House yet. They're expecting the House to vote on it on Friday. But there is a consumer price index coming out on Wednesday. If we see that inflation is hotter than it's been, do you think some people might question whether they want to continue spending more and more money? Just throwing that out there for you. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.